All right, let's get right into it. There's an SME IPO making a lot of noise right now, and it's all about bringing that Swiss luxury watch stream to India. The buzz is, well, it's pretty electric. The company is Luxury Time Limited, and their IPO is happening as we speak. So the big question is this a real opportunity, or is it just a ton of hype? Let's dig in and find out.
You've probably seen this floating around on social media, right? People are already calling Luxury Time the next Ethos 2.0. And look, I get it. Ethos had a fantastic listing, and it made a lot of investors very happy. So that comparison, it's tapping into some serious excitement for premium retail. It's a great story, but we need to look past the story and get to the facts.
And that really is the central question we're tackling today. Is this thing a hidden gem, just waiting to pop? Or is it just a case of FOMO, fear of missing out, wrapped around some really fancy brand names? In this explainer, we're going to break it all down. What the company does, the IPO details, its financial health, and of course, the big pros and cons. That way you can form your own view.
Okay, first things first. Before we even think about putting money down, we have to understand the core of the business. What does Luxury Time actually do to make money?
Well, to put it simply, they're the gatekeepers. They've been around since 2008, and they are that crucial link between these huge Swiss watch brands and you, the Indian consumer. They don't just sell you a watch, they handle the distribution, they run the stores, and they even take care of the servicing after you buy it. The whole package.
And this slide really gives you a great snapshot. We're talking about massive brands like Tag Heuer and Zenith. They've got a solid footprint with over 70 places you can buy from. That's a mix of their own boutiques and spots in other big stores. But here's the key thing, their special status. They are the authorized distributor for Tag Heuer in India, and they even run their official online store. That is a pretty big deal.
All right, so we get the business. Now let's dive into the IPO itself. These are the numbers and dates you absolutely have to know if you're even thinking about this one. So get your calendars out because this window is tight. Bidding is only open from December 4th to the 8th. The stock lists just a few days later on the 11th. So yeah, if you're interested, you gotta move fast.
Now, I want you to pay close attention to this number. This is roughly the minimum investment for just one lot. We're talking over 1,30,000 rupees. For an SME IPO, that is a significant ticket size, and it's something every retail investor really needs to think about when planning their investments.
So let's put it all together here. It's an SME IPO on the BSE SME platform. The total issue size is pretty small, only about 19 crores. The price band is set between 78 and 82 rupees a share, and a single lot is going to get you about 1,600 shares. So the business model seems solid, the IPO details are clear, but do the financials actually back up the story? Let's pop the hood and take a look at the numbers. Okay, looking at the revenue, the top line, we're seeing some nice steady growth. It's climbed from around 53 crores to nearly 61 crores. Now, it's not what you'd call explosive, but it does show a stable upward trend, which in a business like this is exactly what you want to see. Now this is where it gets really interesting. While the revenue growth was steady, check out the profit growth. It's been much stronger, going from 2.6 crores to over 4 crores in the same time frame. You know what that tells me? The company is getting more efficient. Their profit margins are improving as they get bigger. That is a fantastic sign.
So, what's the bottom line on their health? Well, the company seems financially sound. Their return on capital is healthy, sitting in that 18 to 30% range. They have very, very little debt. And maybe most importantly, this is a profitable business, not some cash-burning startup that's just hoping to make money someday.
Okay, we've got the business, the financials look pretty clean. Now for the most important part. We have to weigh the bull case against the bear case. What are the biggest reasons to be excited, and what are the biggest reasons to be cautious? We're going to look at this from both sides of the coin. First, all the reasons to be optimistic, that's our bull case, and then we'll cover the key risks, the things you absolutely cannot ignore. That's the bear case. So, on the bright side, Luxury Time is perfectly positioned to ride this huge aspirational wave in India. As people make more money, they want status symbols, and Swiss watches are at the top of that list. Their exclusive deals, especially with Tag Heuer, give them a real edge. Plus, their mix of physical stores and online sales covers all the bases. They're just perfectly set to benefit as luxury retail gets more organized. But you have to look at the risks.
This is an SME listing, which means the stock could have low liquidity and be very volatile, making it tough to buy or sell when you want to. And that high ticket size over 1.3 lakhs, that's a lot of your capital tied up in one small company. They also depend heavily on just a few foreign brands. What if one of those contracts changes? That would be a major blow. And finally, luxury spending is cyclical. When the economy slows down, fancy watches are one of the first things people stop buying.
So, the million-dollar question: how do you take all this information and actually make a decision? Let's build a simple framework to help you think through it for yourself.
I really love this way of thinking about it. You're not just investing in Tag Heuer. You're investing in the company that gets to decide which watches get the best spot in the showroom, which ones get featured on the website. You're betting on the gatekeeper, the distributor for luxury in India. And look, here are 3 golden rules that apply to any hot IPO, not just this one. First, please look beyond the gray market premium, the GMP. I know it's exciting, but it's just listing day gossip. Focus on the quality of the actual business. Second, size your position carefully. Never, ever go all in on one SME stock. And third, remember that a famous brand name isn't a permanent moat. Those exclusive distribution contracts, they can and do change.
So with all of that on the table, the decision is up to you. Are you thinking of applying for the Luxury Time IPO, or are you sitting this one out? Let us know your thoughts in the comments below. We genuinely love to hear your take on it. Hey, if this explainer helped you out, do us a favor and hit that like button, subscribe to Finologix, and ring that little bell icon so you never miss our next breakdown. We've got new explainers for you every Tuesday, Thursday, Saturday, and Sunday at 6:30 p.m.
अगर ये विश्लेषण पसंद आया तो लाइक और सब्सक्राइब करें। हर मंगलवार, गुरुवार, शनिवार और रविवार को शाम 6:30 बजे नए विश्लेषण मिलेंगे सिर्फ फिनोलॉजिक्स।
All right, let's get right into it.